A new year begins for all of us. That includes Wall Street, where the numbers were pretty spectacular for investors. Can we expect a repeat in 2020? Joining us live, the namesake, Tony Drake of Drake & Associates on WTMJ. Good morning, Tony. Happy New Year.
Good morning, Gene. How are you?
We're doing good. It will be hard for Wall Street to match what it did in 2019. Investors, I'm sure, would like to see a repeat, but is that realistic?
I don't think that's realistic. We should expect a little bit of a slowdown. It was such a phenomenal year. It was the best in about 6 years, fractionally away from the best in much longer than that. So to expect that again would be pretty unrealistic. A little bit of a slowdown, probably a slowdown in corporate earnings, but still anticipating a good year, but hard to beat what we saw last year.
Tony, one of the words we always hear is correction.
Yeah, that's always a big, scary word. And I think we talk about a lot when we talk, guys, about having a long-term outlook. You really have to be aware of your time frame. If you're a retiree getting really close to retirement, might be a good time to, think about, adjusting your risk a little bit, taking some of your gains off the table. But for a lot of us that are still working a ways away from retirement, we can't worry about the short-term volatility. Long-term, you're going to do really well staying invested.
The namesake, Tony Drake from Drake & Associates, joining us live on WTMJ. Yeah, it's hard for people, I think. You're conditioned as an investor when you're younger to be a little more aggressive and watch the big swings. It's great when the market goes up big time. It's tough to watch it go down, and you take that hit. But as you get older, when the news is good on Wall Street, you go to your thing on your app and you look and you go, oh, I didn't make any money today. That's because you're not taking the risk. So the highs are lower, but the lows aren't as bad.
Yeah, I think you bring up a great point, Gene. And it's, you're curbing both sides, right? Anytime we take some risk off the table, then in those big banner years, you're going to look back in hindsight's 2020 and wish you were a little bit more exposed. But, for most retirees or people close to retirement, missing a little bit on the upside does not change or impact their retirement. But if you lose, 20, 30, 40% like we did in 2008, either right before retirement or that first decade of retirement, it's much more impactful than missing some of the upside.
Tony, for younger investors, a 30-year-old who's got $35,000 worth of college loans and is driving a used car and paying rent of $1,300 a month, how are they supposed to save money?
Yeah, that's always the tough one, right? But for most people, we find if you can really buckle down and look at that debt, most of us have something in our lifestyle that's probably costing a little bit more than we think. This can be a great time of year if you got a raise or a bonus. You're used to living without that. That's a great opportunity to use that money to either set up your emergency fund, knock out some debt, or hopefully increase your savings towards retirement. So it's pretty tough to find someone that's not able to do something, and especially if you're young, starting somewhere, that time value of money, just getting that money really growing for you over time makes a big, big difference.
But Tony, I think a lot of it is just as simple as taking advantage of what your employer offers too. I think back again to when I was young, and I didn't take advantage of that stuff when I should have as early as I could have, because that was just something that wasn't top of mind to me. But if you take advantage now, that compounding sure adds up.
Yeah, and a lot of us have that matching from our employer. That's free money. You're not going to get free money a whole lot of places in life. And, there's some neat statistics. If you look at some other countries that, automatically put employees into investment, you have to opt out. The savings rates are much higher. In our country, for the most part, you have to opt in.
Tony, I know that it's different for everyone. Everyone's lifestyle is different. They want to do different things in retirement. But I saw something that said that if you don't have $1 million saved, you're not going to make it.
Yeah, I think those numbers are really kind of salacious, and they sound good, and they're great headlines, and it varies so much for so many folks. A lot of it just depends on what you're spending, what your income sources are. If you're someone, not many of us out there anymore, but if you're someone who's fortunate enough to have a pension, that big number may not be quite as important. So I think it comes down to more understanding what you're going to spend, having a plan, accounting for inflation, and taking a look at some of those things in retirement. Also, some big changes in retirees with this new bill that passed at the end of the year.
And Tony, we had 3 Fed interest rate cuts in the past year. Are we going to get any more in 2020?
No, according to Fed minutes now, it's looking like they're going to kind of hold the line here for this year, which is great. They're not anticipating any rises or increases. That can, of course, change with economic data, but it looks like they're going to kind of hold tight there, and I think that's a good thing for investors and for the markets.
And it's a political year, too, so 2020 should be interesting in that regard.
Yeah, politics definitely make a big difference. We also saw a big change in that federal bill, something called the Secure Act, where retirees now don't have to take required minimum distributions till 72. Used to be 70 and a half, so you can get that retirement money you brought up, Gene, growing tax deferred a little bit longer, but we can no longer stretch those IRAs. Beneficiaries have to take it out over 10 years.
He is the namesake Tony Drake from Drake & Associates on WTMJ. Tony, thank you so much. Happy New Year.
Thanks, Gene and Debbie. Happy New Year.